everyone seems to think you can make money buying when the halving happens in Bitcoin. What if I told you can make money before the halving even happens? Well, let's get into the charts and see what I'm talking about. Bam! So a quick overview of what we'll be looking at today. So we're going to be looking at the halvings, and also we're going to be looking at the pi cycle bottom. So I'll be having a video coming out very soon explaining the pi cycle bottom and top theories. And yeah, so subscribe to my channel and you'll be able to see all these things when they come out. But yeah, let's get back into this. So what we really want to know is how much money can we make before the halving happens from the actual bottom, and we're going to be using the bottom pi cycle bottom theory for this. So as you can see, there's price differences. So the halving $12, and then you have, well, that was the first ever one, and obviously we don't have a pi cycle indicator for that, so we can't really include it, but we're all going to start from here. So we start from the pi cycle bottom, which was $207, and then once you go up to the halving event, we basically 3 times ourselves, right, or near enough, so we 2 times ourselves, so 221% gain from that area, as you can see here, as in and then next one, so we obviously went about our bull market there. This is our bull market, and then we're looking for a bottom again. Pi cycle bottom got the bottom, and it was $3,000 around about, and then when we go into halving event, we see 9,850. So basically 184% gain, right? So you have another gain of nearly 2 times your money again from that. And then yes, we go on to have our lovely bull market, and we go into a bottom cycle again, right? So what does that mean? So the pi cycle bottom this time has been a little different, right? So we got the bottom, what we thought was bottom, but we actually have gone lower. So obviously this is something that people probably say, hey, it doesn't work anymore, right? As in, maybe it does, maybe it doesn't, right? But as in terms of a good buy indicator, if you've got in at 18,650, it'd still be a good buy in my opinion. Obviously, if you're anything lower than that, you can keep buying, and then obviously when the prices go up, then it's going to be a lovely buy zone, right? So what's my prediction on this, right? My prediction is that when we have the next halving, we're going to go up by 142%. Why 142%? So let's go back, right? Let's go back onto the charts, what I was showing you. So on this halving, we went up by a 221%, right? And then on this halving, we went up by 184%. So we can see there's diminishing returns throughout the market, which we know, right? We know that there's going to be diminishing returns. The more the market cap goes up and the more money's in the system, that it's not going to move as quickly, right? And the gains are not going to be as much. So you can see from this is around about 40% drop in gain, right? But still a lovely gain, right? And so if we was to apply that same logic, so take away 40% from 184, leaves us around about 142% in gains, right? So not bad, right? And that means that if we have the bottom from the pi cycle bottom, that is, then that would be really good, right? And so I have an overall price prediction of, if we go into the halving event, obviously price is going to potentially increase by 142%, right? So these are my targets. So my first target, and I'll quickly zoom out so you can see it, is 48,000, and that would be that. So can we hit 48,000? Next one would be 43,000, and the next one would be 36,000, and the next one would be 28,000. So you might say, why are these your targets, right? So I'm also going to introduce to you the Fibonacci retracement tool, right? So the Fibonacci retracement tool is this. So if those of you guys don't know about the Fibonacci, it is basically a tool. It's in nature. So everything in maths is based on the Fibonacci, and I will show you another video. So subscribe to my channel and I'll push that video out and explain that to you. And you're basically all it's doing is drawing a line from the very bottom of that market there cycle to the very top, which is here, and then it actually gives you retracement levels. So as you can see, I drew those 2 targets here, and they're based on the Fibonacci, right? So we're basically using the 0382 line and the 05 line and the 0618 line as the actual retracements and also pullback areas. So what would happen here is basically these are the structure and resistances of those lines, and obviously I'm using my 40% theory as another line to where that structure can be, and I also believe that lines up with the last halving, right? So the last halving, in terms of the bottom to the halving event, we never actually we went up, right, and we never actually broke the previous all-time high, right? So if this was to remain true, we would go up and we wouldn't break the all-time high, and that would actually be a normal market cycle for us. And I'm sure at this point everyone's going to say, hey, we're going over 70,000, we're doing this, and at that point I think we just won't, right? And we'll go back, and what we'll go back to, I think, will be our resistance lines in our last video, which you can see here if you click this link here. And yeah, so basically our resistance lines, where does that leave us? So we'll basically leave us in a good place. So if we was to actually be anywhere around here, so towards the 28,000 to the 47,000, 48,000, right, it's still within the structure of this, right? So you might say, hey, is this pi cycle bottom theory even accurate because we're lower? Well, yeah, that's a great point, right? So let's have a look at that. So if I remove those targets and then we put on other from the low, so let's do that, right? So this is now targets from the low, right? So this low here. So let's zoom in quickly. So our potential targets now have obviously changed, but we are still very much within our same structure that we talked about, right? So this structure here, and our targets are based around this, right? So if I quickly zoom out and you can see what those targets are, so we could have a target of 37,000, and if we was to be around 37,000 around these times, happy days, right? From our current price, or our low was 15,000, so more than double your money, as in and then the next one is 28,000, so pretty close to doubling your money. And then obviously if we was below on this point, it would be around 19,000, but if we was around like this area, I'd say 25,000 is our resistance area. So 25 to 29, I would say I would expect, right? Anything below, we're obviously in trouble and not doing great in this area here. But yeah, that is that theory. And what do you guys think? Do you think this is some logic to this theory? So obviously we're using 3 different data points there. We've got the structural lines from the previous video, which you can link up here, I will link up there, and obviously Fibonacci's, and obviously our overall diminishing returns through the market structure throughout Bitcoin, and just looking at the percentage gains throughout that, right, from the halving, from the pi cycle tops to the bottoms. Yeah, let me know what you guys think. Yeah, hope you guys have a lovely new year. Happy New Year again. And yeah, please leave a comment with your opinions, like the video to get this video out to the worldwide, and subscribe now, and plenty more to come. Don't worry, just subscribe to the channel and you'll get all the updates, and I can show you my views. And yeah, peace. Have a good one, guys.